All right. Thank you, sir, for doing this. I appreciate it.
My pleasure. Thank you for having me.
To start, can you please tell me your name and what you do?
Yes, so my name is Ralph Gebran. I'm the managing partner of Onramp MENA, which is a sister company of Onramp, which is based in the US out of Texas. What we're doing in the Middle East, basically we're trying to educate on Bitcoin. There's a lot of noise, a lot of distraction, and we believe Bitcoin is the most important asset of the 21st century. So not only is allocating to Bitcoin important, but how do you store that allocation? And that's where we specialize in. So we specialize in multi-institution custody and safekeeping Bitcoin for the long term and for inheritance eventually. So what we're here to do, we're here to bring some of the keys to multi-institution custody into the region to give our clients optionality on how the multi-signature vault is set up.
So we've talked a little bit before, and just hearing what you say now, that sounds like your focus is more towards like larger institutions or maybe big businesses or something like that. Is that right?
Yeah. So the target market is high net worth individuals, institutional corporations, institutional investors, asset managers, sovereign wealth funds, family offices. And the reason why we focus on this segment, because it's an underserved segment. Bitcoin would be a $10 trillion asset if we solved one thing: custody. This segment has seen over the years, countless failures. Mt. Gox, FTX, even really trusted institutions that had political backing fail and crumble. And, they're hesitant. It's a new asset class, it's a new industry, and they just don't know how to go about it. And what we're here to do is we're here to help them, educate them, and our solution, I believe, and we believe, that is the only way to scale Bitcoin institutional adoption. Because once you scale institutional adoption and more of this segment enters into the Bitcoin market, typically what happens, even in traditional finance, retail will follow the smart money. So if large institutions starts coming into this, yes, the ETFs did a lot for adoption mainstream. But once the allocators start actually allocating into Bitcoin, it's a totally different ballgame.
Yeah, like an insurance fund or
Yes.
a sovereign wealth fund or things like that. Yeah,
changes the entire adoption curve. Like that's where we go exponential.
Yeah, that's a very interesting way of framing it. I've never thought of it like that. The way to scale Bitcoin or the way to reach mass adoption is through making institutions and these kinds of large funds comfortable with holding Bitcoin. But it makes sense to me. It makes a lot of sense.
Well, it's simple. I mean, just look how much capital they have under their belts. We can try to move the needle as much as we'd like, but at the end of the day, the incumbents of the system that invest pensioner money, they have a fiduciary duty towards the pensioner, and they're not going to put that capital at risk unless they are extremely comfortable with the way the capital is held and stored. And the problem is they're accustomed to the old way of custody, which is basically, we don't think about custody.
Yeah.
You buy the asset manager, you buy BlackRock branded fund,
right?
But you don't think, where is my equity being held? And the reason why is because it's a digital record and you can reproduce it if the custodian fails. But Bitcoin is different. It's a bearer asset. So if the custodian fails or mismanages the fund or loses the funds, then you've lost the asset and you cannot reproduce it to make the investors whole. So I think we're early, and I think institutions are starting to learn about this. 2-3 weeks ago, a UK pension plan was the first to allocate to Bitcoin.
Oh, really?
3% of their pension scheme. And they had an investment manager come in, a consultant, basically investment consultant, to do a search on asset managers.
Wow.
And they used multi-institution custody. Why? Because it solved a lot of the problems they were worried about. Single points of failure, counterparty risk, and not being able to take custody of the actual asset if they needed to. So we're not there yet, but we're heading in the right direction. So that's what I got to say about that.
Yeah. This brings to mind something that I've thought about, which is I believe in the U.S., Coinbase custody is like 5 of the biggest ETF. I mean, like it's
Yeah,
so centralized
that's not
that
the scary
custody.
number. They custody out of the 11 ETFs that are out there, around 80 to 85, maybe even 90% of all the coins.
Yeah. I mean, that's wild.
And it's funny because, traditional finance, where I spent most of my career, they're always looking at risk. How do I diversify risk? That's why there's portfolio diversification. That's why you allocate to things that are not interconnected or correlated. The problem is because the custody component is an afterthought, putting everything under one entity, especially a bearer asset, well, risk isn't linear at that point. The more that asset is held by one entity, the more exponential the risk becomes. And I don't think that's being factored in.
Yeah.
Like it becomes like this vault that everyone has their eyes on.
Yeah.
And the human error is no longer just, a little blip. It's a systemic risk. So we're getting to a point with the ETF where it's like too big to fail.
Yeah. Well, except if it fails, it will fail. There's no bailout. It's impossible.
You can't bring back the amount of Bitcoin you lost and just reissue it. You're going to get what happened with FTX. The people thought they had Bitcoin. Turns out they had none. And then how did they make whole those investors? 2 years later, they had to make them whole in dollar terms at the price where FTX failed, which was at like 16K. So those investors, they got back dollars, but they lost 4 or 5x on Bitcoin's upside, which is crazy.
Yeah. What the work that you're doing, and I hope more custodians come in, and because it is important. It's very, very important. Can I just take a step back for a second? We're at Bitcoin MENA here. Very beautiful. It's my first time in the Middle East.
Okay. How'd you like it?
It's great. To be honest, kind of reminds me of parts of America, right? Like, I mean, which I love. I love America, so it's quite nice. But as I said to you before, when we were talking before this interview, I'm from America, so I kind of am very familiar with America's relationship with crypto and Bitcoin and this kind of like digital asset. I live in Asia I've lived in Asia for 16 years, so I also understand that very well. But I really don't have any idea about the Middle East, and I was hoping that you could kind of give me a little history and then bring me up to where the Middle East stands today with its relationship with digital assets and Bitcoin specifically.
100%. So the Middle East, the GCC specifically, and specifically a few countries within the GCC. So it's very fragmented in terms of digital asset adoption. About, maybe a third of the countries have developed some form of regulatory framework. Now, one of those countries, which is at the forefront, is where we are today, the UAE.
Okay.
Now, what's quite interesting is the UAE, for example, took a very forward-thinking approach to investments and to digital assets in general. Personally, I wish they would differentiate Bitcoin from digital assets, but it's under the same regulatory framework, all of it. Now, what they've done is, they're trying to diversify their economy. When people think about the GCC, they think oil. And there's a very large dependence on oil. This is where the wealth came from. But today we can say that's not actually true anymore. The tourist and service industry has been propped up. You see beautiful roads, safe. There's incentives to come here, even to live here. Tax incentives, no income tax, no capital gains tax. So it's really catering to sophisticated, very educated people from all over the world to come and have a family here and to grow here. Now, from digital assets point of view, we see a lot of companies coming here because unlike the US or other countries, if you want to build a, let's say, Bitcoin business, you don't have to guess what works or what doesn't. There is a clear regulatory framework, and it feels like they wanted to outcompete the West. In the West, they were still like, what is this? How are we going to regulate this? Where does this fall under here? They're like, nope. This is the regulator. These are the regulators. This is the rule book. Come, be innovative, build out fintech, build out, digital assets projects under the supervision of the country and the government. So very different approach. So a lot of companies come here to take a stab at it. And when there's regulation, yes, there's regulatory costs, but it's less risky from the point of view where you're not going to find yourself on the wrong side of the law. When they, like in the US right now, a lot of companies, they don't know where they stand.
It's terrible. It's
Like,
truly terrible.
When they introduce something, some of them might have to change the way their operating model because they have to accommodate this new regulation or they're going to go out of business. Here, there's none of that. And one thing that's very different, here you have access to the regulators. Right? You pitch your idea, they will have a conversation with you
Oh, nice.
about where you would fit under their framework. They might work with you if they think it's very innovative and very out of the box, because they're thinking, how can we do better than the rest of the world? So they will work with you to find a way to regulate it in a positive way so that they win and you win. So that's just where we are today, like in a very flourishing, innovative, forward-thinking environment here.
Yeah. Yeah, I mean, I'm very envious of what the UAE has done and other countries like Singapore, even Japan. Clear regulation. Whether you like the regulation or not, just the fact that it's clear allows businesses to come in, which is amazing.
And it's unrealistic to expect no regulation.
Yeah, of course.
At the end of the day, yes, you might not like a government, you might not like government policies, but at the end of the day, to maintain security order, the reality is there's going to be some form of regulation. Or else, because it's, cryptography, blockchain, decentralized to some extent, not all of them, but because it's like that, there's even more risk to the consumer. And because these are digital assets, there's no speed bumps along the road to slow the movement of funds.
Right.
So if you get rugged or you get scammed, it's gone.
I know. Yeah.
The money's gone. It can't be brought back. You can't call your bank and say this was fraud. No one can come and save you.
No chargebacks.
Exactly. And it's almost, most of these are final settlement. Unlike your credit card, where it takes 30 to 60 days to actually settle, and you call the bank, you're like, this wasn't me, I can prove it, like, cancel this transaction, or it just doesn't work that way. So I think regulation is good. Of course, over-regulation is bad.
Yeah.
And here, they're trying to, walk this fine line where they don't hurt the industry, but at the same time, they prioritize protecting the users of this industry.
I also am in favor of regulation, and what I've found, it's gotten better recently, but especially like a couple years ago, a lot of the people I would talk to, especially a certain brand of Bitcoin maximalists, very libertarian in their feelings, they would get really upset with me, like, regulation, government, controlling you is bad, and I never thought that. I was wondering if you ever have these kinds of conflicts with your fellow Bitcoiners.
Yeah, of course, but we take a very pragmatic approach to what we do. And because we talk to a certain segment of the market, we have to be aware that they are also required to follow certain regulatory requirements, like pension plans. It's going to be extremely difficult for them to own Bitcoin as a bearer asset. That's why they go to a securitized model like a fund.
Yeah.
And that's under regulation. Like they can't buy barrels of oil and it causes problems for them. Where is that going to be stored? Who's responsible for that? So I think, I have a lot of libertarian values and I agree. Sometimes smaller government is the best way to go. I'm on the Austrian side of economics, but the reality, it's not a switch you flip where the world's going to be totally, free for all, unregulated. That's just not realistic. And the vast amount of pools of capital are under regulatory supervision. You'll never get access to those if you can't find a balanced approach and a realistic approach. Yeah. At the end of the day, people make decisions. If they're unhappy with the regulatory environment, they can leave. And Bitcoin facilitates that. So that's the beauty of it, right? If you want to transact, there are ways to transact with Bitcoin without KYC. And those are personal choices you make. But at the end of the day, it's difficult to impose that on the vast majority of people. And, we're running a business. Running a business at the end of the day is an entrepreneurial thing, but no business can run without complying with certain regulations. And you try to vote or you try to voice your opinion, but at the end of the day, you are one voice or one vote. So we can't be, total anarchists, even though some of us would love to be total anarchists, but we have to live in reality. And I try to avoid these conversations. Like, also, I try to avoid political conversations. I will voice my opinion, but I will not push it or impose it on someone.
Yeah.
And I don't think anyone should.
Right. No, I agree. Just to go back to the Middle East for a second, from like a cultural perspective, or maybe just kind of a gut feeling, do you have any? What do you think of people in the Middle East? How do they feel about Bitcoin? Is there suspicion about it because it's this digital thing? And I feel like as you said, a lot of the initial wealth comes from physical commodities.
Yes.
To me, that seems like there would be some level of like headwinds.
Yeah. So the Middle East is a very commodity-driven culture. And also because a part of religion, sound money, especially in the Muslim community. Now, they're used to commodities because oil and natural gas have been abundant here. And there's an affinity to long-term thinking. People think about, religiously, whether you're Muslim or Christian, in the Middle East, either or, there's more people who are committed to the religion. And so indirectly, they're thinking long-term, thinking about maybe not this life, the next one. They're thinking about their children.
Yeah.
Like what I do here and during my lifetime is for my children. So there is inherently a low time preference to things.
Interesting.
Doesn't mean everyone's like that,
Right,
but
right.
these are cultural things that are hard to shake out.
Yeah.
And at the same time, we're a culture of trade. We like to see things. There's a lot of trust that needs to be built, right? There's a lot of relationships that need to be built. And I think they will get Bitcoin, but I think they are always a few steps behind things that happen in more developed countries like the West. Not to say here's more developed than the West in a lot of ways, but some of the trends reach here a bit later. Like movies in the past, movies that would go out in the US would reach, for example, my hometown, Lebanon, 6 to 7 months later.
Right.
So there's a lag. And even from a ideological, cultural, there's a lag. Things get imported because a lot of Middle Eastern people, they send their kids to study abroad, get masters, and then they come back. So they import culture. Certain things are strict, of course. They'll never make it to the Middle East. But understanding Bitcoin is just a few steps away, in my opinion. And I think the key is to create this distinction that Bitcoin is a commodity, not just a digital asset. It's more of a commodity than digital because it is anchored in reality through proof of work mining. And the other stuff are more like tech plays.
Yeah.
Companies are investing in.
Yeah.
But it's clear that we create this distinction. And Onramp MENA is here specifically to educate on that distinction. I think, few years, 1 to 2 years, we're going to see what we saw in the West. People got hurt from crypto.
Yeah.
They had enough. And then they're like, I'm just going to buy and hold Bitcoin whenever I have a chance to.
Yeah.
And just from an institutional adoption worldwide, the Bitcoin ETFs have destroyed any other altcoin ETF. And it's the only asset that large asset allocators are even considering. So I think that will reach the Middle East very soon.
Good. All right, so let's talk a little bit about Onramp MENA.
Yeah.
As you said, you are focused on high net worth individuals or institutions, bigger players. I was hoping you could tell me what challenges that you faced in the past couple of years, and maybe where you think Onramp MENA's, uh, what you're going to be doing for the next couple of years in the future.
Yeah. So the biggest challenge is why Bitcoin?
Oh, okay, really? So
Yeah.
that they start right there.
Yeah,
Wow.
because a lot of the traditional asset allocators or asset owners, they're on average older. Their kids will take over at some point. But for now, talking about Bitcoin is not something that they will instantly grasp. They will ask questions like, what about the other coin?
Ah, interesting.
Because they see stuff on the news, social media. And the thing is, when you explain it to them, it clicks. And one of the biggest challenges, am I too late? Which is a common, unit bias.
Right.
But when you see Bitcoin hit 100K, start asking questions like, we never thought it would break 69,000. Now we're at over 100K. If we hit 150, what's next?
Or a million.
Like in the next few years. And you have also the United States that gives it even more reinforcement with the current elect administration, being really heavy on Bitcoin, talking about Bitcoin strategic reserve. So I think people will realize that Bitcoin is a commodity. That's what we solve first. The second part we have to solve is why custody matters. So these two questions, why Bitcoin, why custody matter? Because a lot of people think like, oh, I'll just buy the ETF because they don't understand the inherent risks. They think it's like another, share of equity. You need to explain why Bitcoin, then why custody matters, because Bitcoin is a bearer asset. And the idea is you have to kind of go through this step-by-step process until they get it. And that's why we're here. And I think we'll keep doing that more and more as time goes by. But once we get our licenses to basically promote our tech, which is the multi-institution custody technology, will be even easier. Because when we talk about MIC, they just get it. They're like, if I could have 3 custodians sharing the risk, none of them having control over the asset, the client maintaining full control of the asset, and there's full transparency where I can see my holdings 24/7, 365 days a year, why wouldn't I choose that? And I'll even pay for it a little.
Yeah.
Because I'll guarantee that if one of these blows up, it doesn't matter. Another FTX event won't affect me. And at the same time, I don't have to worry about how am I going to inherit this asset to my family. Am I going to draw them a treasure map with like where my seed plates are, the machines, and send them a list of YouTube videos they have to go through? I can tell you for sure, even though, for example, my wife is a total Bitcoiner and she loves Bitcoin, it's not easy. Like,
Oh, no, it's
and
not.
I worry that I'll overwhelm her.
Yeah.
And,
I would never, honestly, I would never let my parents buy Bitcoin in a self-custody way right now. I just wouldn't.
Can you really? We're passionate about it. She loves it, but is she as passionate to want to go nitty gritty into the tech, test the wallet?
Exactly.
I don't think so.
Yeah.
Even my kids, they might just use Bitcoin. It doesn't mean they're passionate about it, and they want to. It's like people who have an iPhone. You don't care how the iPhone works; you just want it to work.
Yeah.
A lot of people will want to use Bitcoin, but they don't care what happens under the hood. So once you have the custody problem solved, and I think we have the solution to solve it, a lot of financial services will come to Bitcoin.
Yeah.
The other thing that you need to break through is that you need to show that there's a vibrant ecosystem on Bitcoin. People think it's just there's no utility on Bitcoin, but that's not true. Once you solve custody, utility in of itself will come to Bitcoin. Why would you want to build utility on top of any other protocol? It's the most secure, most decentralized protocol out there. It's backed by 740 exahashes, 30 nuclear reactor, whatever the number is. Why? And it's decentralized. It has no single point of failure from protocol level. And we've proved that in 2017 with the block size war. No institutions can change the consensus, which is amazing. So I think solve the custody problem, and build on top of it. And you'll see lending done with multi-signature. You'll see a bunch of stuff. The whole yield thing, I don't know. I'm not going to get into that because no one can answer the question, where does the yield come from?
Yeah, exactly. Means you are the yield. But anyway, yeah.
Like BlockFi, Celsius.
Yeah. Of course.
It's left a bad taste in my mouth at least. But you know what? I'll give it the benefit of the doubt.
Everybody. I just wanted to make one comment.
Yeah.
Man, I bet. So the question, like this is a great question, right? Like why custody matters. That is a great question that they're asking, and right? Why custody matters? I should just buy the ETF, right? But man, the U.S.'s actions the past couple of years with sanctions and stuff, I think they really helped answer that, right?
Yeah,
it really, really helps.
And people will tell you, and I love self-custody, but the beauty of it, you don't have to just choose one model.
Yeah, exactly.
And this is what a lot of, people fail to see. We are now at an age where you have the ability to, as part of asset management, there's custody management.
Yeah.
Meaning these assets, especially Bitcoin, now you can choose, I want a portion of my wealth in self-custody. This is my, my runaway, my getaway stack.
Right. Safe deposit
I have
box.
Multi-institution custody. That's like my long-term saving. This is, I don't need this. This is just my stack that keeps growing.
Yeah.
And you can have any other model you want. You can have, a mixture of both, maybe. And then you decide the allocation. So there's now a subset of asset management. It's not just about allocating. It's about how you allocate.
Yeah, exactly. Right.
Which will create an industry on its own, right?
For my mom, it would be, for example, it's a multi-sig wallet.
Yeah.
Right. One of two.
Yeah.
Because I don't trust that, she would be able to lose the keys or something like that. And so then I trust myself. So, okay, Mom, here's the wallet. It's a multi-sig. It's a 1 of 2.
But still, God forbid, you can't be there to sign or figure them out technically.
Yeah.
Doesn't solve for them.
Right.
Even if you write down a very detailed doc, still not going to solve for it. They don't have the practice.
That's true. Yeah.
Right? And do you want to put them through that? Because a mistake with...
Well, they're just not going to do it.
Yeah.
The bottom line is they're just not going to do it.
And this is where we think multi-institution custody is solved, because your mom and dad, they could have their own vault. They own it.
Yeah.
Legally.
Right.
But they don't have to manage private keys.
Yes. Yeah.
And they can add you as a beneficiary. And then, if needed, you can take over the account. And the beauty of it, none of these institutions can access the access.
Yeah.
Because they only have one of the keys.
Right. That's awesome.
Yeah. So it's a really unique, and I think there's going to be lots of appetite for that here. And the reason why is because risk sharing is a thing, especially in Muslim religion. Risk sharing is a thing. It's an ethical way of investing together. Yeah, because the person selling you the solution and you using the solution, basically, you're in the same boat together. You only get paid if the solution functions properly, both of you. Unlike traditional finance, where you have to pay me a fee, whether I perform or not. It doesn't matter. You still have to pay me. Versus, I'll put skin in the game with you. I believe so much in this product. If it doesn't succeed, none of us gets paid. And if it does succeed, we together get paid. And that builds trust. So risk sharing is a very strong thing in the Middle East as well.
Cool. I like it. I'm going to research this afterwards. All right. So I have one more question.
Yes.
Thank you. You've been very, very generous with your time.
Oh, appreciate it.
You've been here for a decade. Is that
no? I've been here for 7 months, but I lived over half of my life in the Middle East.
Okay, great. Yeah. Sorry. Thank you for correcting that. I was wondering if you could give me any kind of prediction of where you think the Middle East is going to be 5-10 years from now with its relationship with Bitcoin.
Yeah. So this is where the mining component comes in.
Oh, interesting.
You have one of the biggest oil reserves, natural gas reserves, and you have the sun almost 365 days a year. There's an initiative to create more sustainable energy in the, because they understand oil is not forever. they have unlimited sun. They have, lots of natural gas reserves as well. But the idea is they can hyper expedite sustainable energy.
By paying for it with mining.
By monetizing it with Bitcoin mining. Like, you just have to build a solar farm in the desert.
Yeah.
And plug miners there. Or you can use mining to resolve the flaring issue of methane and become pretty much carbon neutral. And I think my prediction is, and this is not official.
Of course. Yeah.
Like many people here, we all think that's already happening.
Wow.
We think that there is some component of Bitcoin mining being done at the government level or some form of stacking, especially now that the U.S. said potentially they're going to have a Bitcoin strategic reserve.
Right. Yeah.
And we learned the hard way in the West that they're very quick to act here.
Yeah.
They're nimble, they're flexible, they're innovative. They're like, do we want to potentially stack after the U.S.? Or do we want to be doing it before they do it, just in case they decide to do it? So I can see that given the way they built the Middle East.
Very interesting.
We will only see that more moving forward. Like Dubai Expo, Saudi Expo, lots of capital investment happening to compete with the West. And it makes sense. The Middle East is literally the bridge between the West and Asia.
Yeah.
Like, it's like this hub where you can reach the entire globe much easier.
Yep.
And the incentives to have an entity here, to live here, make it even more easy. So I think we'll see a really big growth in the region. The way governments, the way the government organizations are actually incentivized to support you to establish you, which is not something you could say is common all over the world.
Yeah, absolutely.
Yeah, so that's my prediction. I think we'll see a lot more Bitcoin, not crypto, in the future. I hope so.
All right, very good. Well, thank you very much, sir. I appreciate your time.
Thank you so much for having me.